Hi, everyone, and welcome back to another show. My name is Tyler, and I'm here with Matt, the founder of ORATS, an options analytics platform built on top of over 15 years of historical options data. Our dashboard is integrated with Tradier, meaning you can research and discover trades on our platform and then seamlessly send them through to your Tradier brokerage account. Today on the show, we're going to discuss options indicators and how you can use them as signals in your trading strategies. Matt, do you want to share your screen and get us started by going over our current positions?
Sure, but since we talked about kind of a general topic last week, we didn't put on any trades. So what we talked about was the permanent portfolio, which is an older concept dating back to the 70s about having gold, the S&P 500, or a market index, and having bonds and some cash. And we talked about protecting those assets, at least three of the four, with options, puts, or put spreads, and calls or call spreads. So we didn't have any specific ones, but so we could jump right in today, Tyler. I think you're muted.
Oh, I was.
I tricked you by flipping it over to you quickly.
Yeah. So today we're going to go over signals and indicators and some of the entry and exit criteria in the backtester, and a bunch of the different ways that you can use ORATS indicators to help you trade and generate alpha. Do you want to start in the Outlook tab, Matt, or do you want to start in the backtester?
Yeah. So and just to start kind of start with this in general, a lot of people trade options. Some people just find a strategy that might work in a back test, or just think of a good option that they heard someone else do. But what you want to do in trading, and we talk about it on our site, with the university, you want to have research, you want to have very good implementation, good risk management, and the ability to review and pivot if something's not working. So that's the concept that we talk about, and we've built ORATS around. So what you want when you're using research to develop a strategy, you want to develop something that gives you some competitive advantage, a moat around your castle, something where people can't easily find or do what you're doing, becoming an expert in your niche, those types of things. And so ORATS was basically founded to help people do that. We do a lot of the hard work and have been doing it for about over 20 years. And it started on the floor where we came up with proprietary signals that were successful for my trading operation when I backed traders. So part of that, a big part of that, is using our data. And it's proprietary, but a lot of it is not necessarily proprietary. It's just that we're creating very accurate readings. For example, an X earnings volatility. So we are able to strip the earnings effect out of implied volatility so that you can see and use that in your studies and even when you're calculating like a component weighted volatility. You could use that data, and so it's not how should I say it? It's not contaminated during earnings. So, for example, here's the XSP, and this is the Outlook tab. The Outlook tab we use to kind of get a visual on what's driving stock market or price performance, what's driving implied volatility, and put call slope, and we get a good look at that in the Outlook tab. So one of the things that I like to look for in the Outlook tab is where is implied volatility versus turn on my drawing tool. So the market has been basically going straight up since vol was high here, came down a bit, and now it's coming down again. But it looks like it might be kind of shifting up. I don't know. Is this going up now? Could be. So when that happens, like for example here, we get a little downdraft in the market when volatility kind of spikes up. Now that could be happening here, so that's something definitely to watch out for, are these volatility spikes. And again, in a lot of our data, we could look out for these types of things and actually back test during these periods. So this would be like a implied volatility and it's 10-day moving average. So it's a 30-day calendar day constant maturity versus a 10-day moving average. So when it goes above it, that's not a good sign. When it goes below it, that's a pretty good sign. So that'd be one thing to look at.
Yeah, the way that it overlays there is interesting. So we also look at IV implied volatility versus the SPDR sector ETF. So if you have XSP, we have _C specialized symbol that represents the components of that ETF. And what this allows you to do is also, in addition to just comparing implied volatility to its history and looking at the chart, you can compare it to the implied volatility of all components in the sector to see if there's sort of a mismatch there. What might that mismatch sort of tell us?
Well, when everything goes down, that ratio goes way up. And what that is correlations all go to 1. So a healthy market is when correlations are opposite than that. It's less than 1 or it's low. And that's what it is right now. So this has been a very healthy market for a bullish market when implied volatility of the components is versus the market. So the market is that's low. So that's the benefit of non-correlation. That's the benefit of diversification, so to speak. So when we see this as very low, and right now definitely does seem to be low. We haven't seen this low since early summer. So again, is that but you also want to see, will that turn or will it continue to go down? This is even looking back before that, I remember that's pretty low. So it's usually 50% is about the low, and these are pretty good times, right? So, and then again, when it shoots above, that's bad for the market usually. And you could see it here. You could see, so it was above for a fairly long time here. And even though the market went up, it was basically a sideways, pretty volatile market. And that was a lot before the election too. So that kind of threw things off when that ratio was pretty correlated. But then after the election, you saw this. So after the election, you saw, basically uncorrelated and healthy market signals after the election.
Yeah. And another thing these charts tell us is each one of these sort of signals that you see, sort of the 3 bullet points below, where we're comparing the IV to its history, to the forecasts of IV, and also to its components. That's something that we've backtest sort of on a simple level, the relationship between the moving average and then the expected IV in 10 days. And so if there is a positive correlation there, then we can sort of assume that it's going to revert to that moving average. And that's sort of where we derive the bullish on IV signal that you see at the top of the chart.
And it's green, so this explanation is bullish. This explanation gray is neutral, and this explanation down here is bullish. So we look at things in a few different lights. So yeah, good point, Tyler. And then we can continue down the page, and then contango is a very important one. Contango is the amount of front months. So these are all the different expirations versus the back months, and it's choppy because there are certain months that have higher and more stuff going on near it. So it gets a little choppy out here. But in general, you're seeing contango that's upward sloping, and that's actually good. So contango this is positive. Contango means the front months are below the back months, or else it would be called backwardation when it's like this.
Yeah, and depending on the stock, the contango can have more or less of a predictive metric. In this case, we see that it's neutral because the back testing doesn't show a correlation to the stock price in 10 days. But that could be different depending on how far out you're looking, and also on the stock.
Right. But, basically it's usually positive. So like as contango was coming down here, the market was going down. As contango then started to rise, the market started to rise. As it came down, again, this is a lot of the election, but then, the market still came down. And then after the election, it returned to above zero. So this is the contango backwardation line. And now it's been kind of coming up. But again, everything looks like it wants to come down a little bit to me. So I'd be, like I said, a little bit nervous if I was a bull. So I'm kind of like in between camps on the contango and the IV relationships too. Now, slope is just to put call slope. So what we see, is like the 100 call delta. So, or some would say the low puts or the low strikes are on this side, the high strikes are on this side. When it gets really slopey or a steep slope like this, that means the puts are highly valued. And right now, especially compared to the components, you're seeing a very high slope, and you're seeing that the current ratio is above the moving average. So that is pretty high. The forecast, the current slope of 5. Is higher than the forecast of slope, which is 3. So everything's saying the slope is high right now, meaning the puts are high. Especially, what I've been seeing a lot is a lot of call skew bid up in the individual stocks, especially like if you look at the Russell, the smaller cap stocks, and you look at the 5 delta, those are as high as we've ever seen it. And that's saying something. So there's a lot of, and I would say that is kind of risk appetite, meaning that the small calls are bid up.
Yeah. Yeah. Thanks, Matt. So we did get a question on the implied volatility chart, asking if it shows bullish on IV. Does that mean we're bearish on XSP? I wouldn't say necessarily, because ORATS does not make predictions on the direction of equities, but we want to give you the signals and the indicators to sort of draw your own conclusion based on the data, right? So you got to look at the implied volatility as well as the contango, as well as the slope, right? Is there anything else to add to that, Matt?
Well, I mean, there are some other ones that I like to look at, including forward rates, but it gets a little bit complicated. But the big ones have been mentioned, and we do kind of say, we're neutral on or bearish on stock price. But what we want to point out is that if we're bullish on IV, especially in this type of an environment, that's generally not going to be that favorable for the stock price. So that's a good question. By the way, Tyler, we should mention that people can watch. Do you want to mention that?
People can what?
Watch our show live and have questions.
Yeah, that's great. That we're getting comments and questions. That's the whole point of this live show, is to answer your questions about the platform, or just options questions in general. Matt's very experienced and has a lot to offer. So that's the point of the show.
And like and subscribe. That helps people find it. And then if you have questions, we reply to all the questions. So ask questions there. All right, should we move past the Outlook tab and talk a little bit more about using indicators in a strategy, Tyler?
Yeah, so we have that in our back testing tool. So we have these live indicators that you can look at. Maybe briefly, just show the signal builder and the trade builder. This is where you can see these indicators live. It's sort of at an end of day and an intraday granularity, and you can sort of make these combinations of indicators, and sort of tell you what they mean.
Yeah, very good point. So I love using this signal builder, even though it's a very difficult tool to get going and tune up. But what you can do is I'm dragging it back a few days here, and you can see the level. This is every minute of implied volatility. Again, we're seeing it coming down, but you can see it every minute. And sometimes it's neat to look to get signals, intraday signals, using our 1 minute bars. So one of the things that ORATS does, I think, very well is creates these indicators, of which we've been talking: contango, relationship between the component implied volatilities, and basically, I don't know, what are there, 700 of them if you look at all of them. So we're calculating these in near real time, just a few seconds of a delay, and so they could be used to help trigger buy and sell of option strategies, and use all that in back tested strategies. And we put out all these on a minute by minute basis. So this is the future of trading. I think it's going to be more automated, and really, as people start to automate their trading, they're going to be looking more and more for indicators like these, instead of just finding a good strategy that just kind of works, like, at 9:45 a.m. Buys a strangle and sell a closer dated strangle and exit it if you get 10%. Like there's a lot of fitting that goes on in some of the strategies that I've been seeing. But what you want to do is utilize these parameters, these indicators in your trading. So again, you could find something that not a lot of other people are using, Tyler.
Yeah, that's a good point, and definitely where the future of trading is going. In more automated ways, more efficient ways to use all these indicators and data.
Right. And then you mentioned the trade builder too.
Mm-hmm.
In the trade builder, we could look at our trend lines, which I like to look at. This is a valuation surface, and this is where the expected moves lie. I mean, it kind of overlays like 65%, 75%. So, but we draw what I call the value vol over that. So that's really cool. And then we're looking at implied volatility in blue, and in magenta, the historical volatility. So you could see that relationship, kind of how it's been coming down as well. So yeah, we have the signal builder that has minute by minute, the trade builder that has, this is one of our more popular places because people really like to look at charts and such. And this has all the open interest, and these dots are all of the implied volatilities for each expiration. So I think that's really cool. You can see where the volume is today. Mostly it's in the front month. So this trade builder, like I said, one of our top tools. But again, back to developing a strategy that utilizes these indicators. How do you do that? And I think a good place to start is the back tester. So, if you go to the back tester, this is the back test finder. So we have 181 million back tests that we've pre-run. So this is a really good place to start. And then you could go to our custom or legacy back tester up here. So what do we see? So I want to look for a short put spread. This might be something that I want to just trade on a daily basis. And so, or always have on. So what are the good ones? So we could sort these by many different things, but we're also have entry triggers. So I've selected the entry triggers for the current environment. So I want to find out which strategy works well in a current environment. And whereas this might be a different way to use the indicators, I think it's a very effective one in that what we do is we say where the main and popular indicators are right now. So VIX under 15 we characterize as low. So that's the C means that's where it is currently. The simple moving average for XSP, which is or for SPY, I should say, is above the 50-day moving average and above the 200-day moving average. So both of those get a C. RSI is overbought. That's a 14-day RSI. The IV percentile is low. It's lower than 33. And the slope percentile is moderate. I would have thought that was high, but I think it's kind of been the highest end of that. So that's where things are now. So in this environment, the best one for this particular, you could sort it on many different things, but for this particular one, and you could read what this means. So this has the returns divided by the worst month, the worst annual return, and the max drawdown. So those are things you want to minimize. So those are the divisor. And so the best one in this case would be this particular trading strategy. And you can see that there's not much drawdown. And let's just see that the performance metrics, it's not in the market that much because we only are there when it's overbought. And when the stock price is above the 50-day simple moving average, this is the strategy that that they want to use. In these cases, I like to look at the P&L per day, 0.01%, rather than some of these other ones, because you could tell these don't always consider how many days you're actually in the strategy. So, and then you look at things like the percent of time in the market, the win rate, not very high because it's exiting very, very quickly. So your average loss is small compared to your average gain. So you could look at that, look at those types of things, and this is where this is very kind of a free cat strategy, I guess, in order to put it somewhere different. And you could look at, the worst year was like negative 0.36 or negative 0.74, so pretty small. And then there's been some 3% years, down a little bit this year, and you could see some of the trade logs and how they've looked, and where you're making money and when you don't make money and what happens. So anyway, this back tester is I think very good, and I like that it uses some popular indicators, and then you could kind of see how things work with those indicators, Tyler.
Yeah, that's definitely a great tool for that. One thing I want to mention is if somebody wants to test different indicators than the ones in the Finder, you can do that in the Legacy backtester.
Right. So you click up there.
Mm-hmm.
And so, and what you do is, actually, I was running one right here. So what you do is you go to the backtester in the old Legacy. This is our initial one. So you go to the backtest, you could create backtest, go SPY, and we'll do, like I said, just a standard short put spread. We'll just leave the 30 days, 30 delta, 15 deltas in there. But we could then go to our entry parameters, and you could do things like contango, or you could even use technical indicators, MACDs, all the way to SMAs, Bollinger Bands, etc. You could use technical indicators, or you could click on that again, and it goes back to just our regular indicators here. So there's just a ton of them here. So let's set one. Do you have anything that you want to test particularly, Tyler?
Any indicator that we can use?
Yeah. Anyone that you want to use for, like you could use contango, you could use whatever.
Yeah, I mean, I like the flat forward stuff. I think that's some real value add, but might take some explaining.
Yeah. So So the flat forward rates are what we do is we compare a forward rate. So what that means is if the 30-day volatility is 20 and the 60-day is 30, then you know between the 30-day and the 60-day, it's got to be higher than the front month. And so that's what we call the forward rate. What the implied rate is between two dates in the future. And what happens is when that relationship starts to break down with other ways that we calculate the forward rate, there's a mechanical way and there's a way that you could do it where you go and get the implied theoretical price. So we call that a flat forward versus a kind of a calculator or a kind of standard forward rate. Where those differ is where I think I've noticed that there's it's a good indicator of things in the market that are looking a little unstable when those go high. So you could use that rate, and then you could do it in relation to like a versus a moving average. And we won't get into that too much today, but so if that goes up, we could see how that looks. How's that, Tyler? We won't.
Yeah, I like it.
Too into it, but let's run that. So I've run a few before this. It looks like they might be processing still, but what we could do is maybe on a later show or something on that, come back and kind of look at how those tests have done. Or why don't we just do it now? So here's a test that I ran with using the indicator. So if you view inputs, you could see that I used, or actually this is the one without
the base test.
Yeah, this is the base test. So this is the base test that you want to compare against. So that base test returns 1.16. The max drawdown is 15%. And so, this is a, decent basic test, but pretty low Sharpe and Sortino. So now if you go compare it to, here's one that didn't work that well. So this is using when the VIX is under 20. So this might be a little bit counterintuitive, but when the VIX is too low, that it hurts the profitability of this particular test. And I've seen that now a couple of times. So you'd probably want to do the opposite. You want to set some type of a minimum, because you want to, when you sell this particular put spread, you want to get enough value from it. And then, again, this is just the first step. I know people that have done thousands of these tests. So this would be something in this particular short put spread that you want to pay more attention to, is only do it when the VIX is higher. And then so I did another test with what was this one? Where the must have done it backwards there. So I made a mistake on that one. And that's why I was like, oh, that's very close, as a matter of fact, exactly like this one. So I input that. I was doing it quickly before we got here. And here's yours, Tyler. So yours is the best so far. So using that forward to trade allowed us to be in the market, still 90% of the time, but our drawdown was lower and our return was higher. So again, that's just another way that you can, use these indicators in back tests and try to find which ones work the best and create a thesis. You don't just want to go curve fitting, but you want to create a thesis. And for example, it looks like you want to trade this when the VIX is higher, so you get more. Or in this case, when the market might seem a little bit unstable, when that FB, what do we say here? The FB, is is a little bit high. So yeah, Tyler, that's I think a good primer on using proprietary indicators to find strategies and to understand when are good times to get in and out of certain strategies, and then start to become an expert in when to trade the strategies that you want with the parameters that you want to use.
Yes, it was great. Thank you, Matt. Yeah, I think the Outlook tab combined with the Signal Builder and Trade Builder is a great way to view the live signals and what they mean. And if you really want to dive deep into your own strategies, the legacy backtester is the way to do that. So thank you for showing us. I also appreciate the question that we got from our viewers. So great to see those coming in every week now. If you guys want to ask questions, always feel free to do it on the live show or in the community tab in the ORATS dashboard. You can also email us at support@orats.com. As always, thank you, Tradier, for hosting us. We'll be back again next Monday. See you next week. Thanks, man.
I think so.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.